2022 market crash. Why everything is down. Cryptocurrency prices have been dropping. In the last few hours, the majority of top coins have plunged drastically from their previous levels, alarming investors and other stakeholders. Welcome to Crypto Talks. In today's video, we're going to talk about the 2022 market crash. So watch the video till the very end. According to Sharat Chandra, a crypto expert and vice president of research and strategy at EarthID, the negative atmosphere is apparent, and not only in the crypto markets but also in the stock and bond markets. Several other top 10 crypto assets have seen their prices collapse in recent days. Take a look at how prices have moved over the previous 24 hours. Ethereum, ETH. The price of Ethereum has declined 5.9% in the last 24 hours to $2,319. In the last 7 days, the price of ETH has decreased 18.63%. It is presently the second most valuable crypto asset in terms of market capitalization. Binance BNB. The price of Binance currency has declined 11.67% in the last 24 hours to $309. In the last 7 days, the price of BNB has plummeted by 20.92%. It is now the fourth largest crypto asset in terms of market capitalization. XRP. The price of XRP coin has decreased 11.87% to $0.502 in the last 24 hours. According to Business Today, he also projected that Bitcoin would go below $30,000. Bitcoin miners are attempting to liquidate their assets, the exchange supply is running out, and net miner flows are negative. According to Chainalysis, private wallets account for 40% of Bitcoin inflows on exchanges. Anyone who follows the cryptocurrency market knows that it has been a roller coaster ride this week. The only question that remains unanswered is why? The truth is that there isn't a simple answer, albeit there are a lot of interconnected factors that could be to blame. Rising inflation, interest rate hikes, and geopolitical concern brought on by the Ukraine conflict, according to Bank of America global crypto and digital asset analyst Alkesh Shah, might all be contributing causes. The Bitcoin market has faced substantial headwinds as a result of these factors. In April, consumer prices rose at a slower rate than in March, but still faster than economists projected. For the first time in 22 years, the Federal Reserve lifted interest rates by a half percentage point this month. As a result, crypto has taken a big knock this week, dropping $200 billion in just 24 hours on Thursday. Bitcoin has dropped to a 90-day low of $26,350, accounting for nearly 44% of the cryptocurrency market. The cryptocurrency rose to over $30,000 on Friday, according to CoinMarketCap, although it was still down 15% for the week and over 56% from its November high of $69,000. Bitcoin's link to the stock market, which has recently plummeted, is another factor dragging it down. According to Bank of America analysts, Bitcoin is acting more like a risk asset than an inflation hedge. The most extensively used cryptocurrency is Bitcoin. One cause for investor concern about crypto is the recent decline of Terra UST, a former stablecoin favorite. The entire crypto market was destroyed when the so-called algorithmic stablecoin fell dramatically below its reportedly set peg to the US dollar. Stablecoins like Bitcoin and Ether were established to provide a safe haven for investors who wanted to avoid the volatility of other cryptocurrencies like Bitcoin and Ether by keeping a consistent value independent of market conditions. UST lost that peg after a week of turbulence, trading as low as 13 cents on Friday. After trading for $80 a week ago, Luna, its twin cryptocurrency, lost nearly all of its value overnight. As the stablecoin's value began to decline, investors rushed to purchase it. Cryptocurrencies have had a rocky start to the year, and as of May 12, Bitcoin BTC had lost roughly 40% of its value for the year, while Ethereum, ETH, and Binance coin BNB had both dropped around 48%. These are the top three cryptocurrencies in terms of market capitalization, excluding US dollar-backed stablecoins like Tether USDT and USD Coin USDC. This isn't the first time Bitcoin has gone down in price. From mid-May to mid-July 2021, cryptocurrencies had another big drop, with Bitcoin plunging by almost 45%. Despite its volatility, many investors are still interested in cryptocurrencies. Crypto aficionados have long predicted that the currency's independence will protect it from inflation and natural disasters. The most popular cryptocurrency, Bitcoin, is not controlled by any single entity or government. Many people felt that Bitcoin's autonomy from the government would protect its value against economic downturns, international wars, and drastic policy changes. However, the last few years have shown that this is not the case, and in March 2020, when the coronavirus pandemic wreaked havoc on global markets, Bitcoin fell by 57%. Analysts say that a combination of free time, disposable income, and government-injected pandemic relief money caused stock markets and cryptocurrencies to recover and climb at an astounding rate. Investors have recently been wary of change as the Federal Reserve and other central banks have raised interest rates in response to rising inflation. For investors looking for a secure haven, Bitcoin, which fluctuates rapidly by nature, may appear to be unduly risky. Bitcoin's demise comes on the heels of the Dow and Nasdaq's worst single-day losses since 2020, as well as the S&P 500's lowest point in the preceding year. The market has been thrown off by Russia's invasion of Ukraine, which has exacerbated inflation, supply chain issues, and oil prices. In the face of COVID-19 outbreaks, China's sluggish economy is exacerbating financial problems. Although some crypto enthusiasts predict that Bitcoin's price will eventually separate from the stock market, the two are remaining linked for the time being. Cryptocurrency is dangerous by definition. Even the most enthusiastic cryptocurrency proponents will tell you that success is far from certain. The promise of generating money at rates substantially faster than those offered by traditional stockbrokers is part of what attracts many speculators. The risk of a bust, however, comes with the promise of a boom. Since Bitcoin's inception in 2009, there have been multiple large bear and bull cycles, with short-term speculators flooding the market and then departing it. Many exchanges offer inherently risky offers, allowing traders to buy in crypto using borrowed funds, particularly during peak times. There will be a shortage of actual cash if prices begin to decrease, whether as a result of significant investors selling their shares or for other reasons. There is a strategy for individuals who have made a cryptocurrency investment. Even though things don't appear to be going well right now, those who have invested in the crypto markets have nothing to fear. This asset class has always been volatile, and previous collapses in 2020 and 2017 resulted in the asset class rising to all-time highs. Investors should save their money and focus on long-term objectives. The recent meltdown has shown us that diversification in crypto allocation is key. Crypto as an asset class has demonstrated throughout time that it can deliver good returns. Focus on blue-chip coins, rethink your strategy, and limit crypto holdings at 10 to 20% of your portfolio, depending on your risk tolerance. It will be interesting to observe if the crypto crisis continues, however, because investors are still unwilling to buy on dips, the bear market is likely to persist. When the price of Bitcoin went below $30,000, investors bought the dip and entered the market at a lower price, causing the price to climb again. Despite the day-to-day volatility, Bitcoin and other blue-chip cryptos are expected to maintain the zoomed-out growth pattern exhibited over the last decade. Investors might stretch their costs out in small increments when prices fall and repeat the process as prices increase, rather than waiting for an absolute bottom to buy tokens. As a result, volatility should be lower and returns should be higher. So if you're looking for a long-term investment, buy low and hold on for dear life. According to the online newspaper Axios, the monetary impact of a Bitcoin crash is predicted to reach $250 billion. However, that assessment indicates a misunderstanding of the utility and markets of cryptocurrency. The technology that supports Bitcoin, the blockchain, has already attracted a lot of money. Apart from that, the price fluctuations of Bitcoin show that it is establishing itself as a store of value. Cryptocurrencies can also be used to exchange value in confined spaces. It will take some time for their utility in mainstream applications to be recognized. The current rise in the price of numerous cryptocurrencies is mostly due to a domino effect produced by Bitcoin's rise. A dip in the price of Bitcoin nearly always leads to a price correction in other cryptocurrencies. Alright everyone, this brings us to the end of our video. I hope you enjoyed it and got some fresh out of it. Make sure to subscribe, give the video a big thumbs up, and don't forget to ring the bell icon for more videos like this.